Hello, welcome European listeners and market participants, and welcome to KBRA's latest European Credit Podcast. I'm Kerr, Head of European Research at KBRA, and today I'm joined by my colleague, Karim Nassif, from our Project Finance Rating team here at KBRA. And today we are going to discuss a hot topic, I would argue, looking at battery storage. Here in Europe, there is an emerging energy crisis and a focus on renewable energy. And while this does present an opportunity for some markets in the renewable space, there are some challenges associated with this great energy transition. So, jumping right in, Karim, turning to the battery storage area, why has this become such a hot topic recently?
Thank you, Gordon. The real driver here is security of supply on the one hand and the energy transition on the other. So we were operating in a landscape where energy transition meant more and more renewables coming onto the grid. And certainly in some countries, renewables are now ranging from 60 to 80% of the grid makeup. And that brings instability and intermittency issues to the grid. And what batteries can do and have been doing, because they're not new in terms of technology, they've been around for a couple of decades, but being used increasingly in terms of supporting grids, is they can store energy and then release it. And they can also act as backup power capacity to ensure that grid stability and grid balance is maintained. So the role of battery storage is becoming increasingly prevalent now in terms of focus and attention, because there's more and more renewables coming on the grid. And there's a question around how are we going to manage this volatility on the grid in terms of supply demand and also in terms of pricing. We are seeing periods with negative pricing emerge on some European grids. And this has implications ultimately, not just for national governments and regulators, but for the consumer as well. And whilst there are other storage devices, battery storage seems to be at the moment one of the main remedies to these issues. One other thing, obviously, the Russian-Ukraine conflict has meant that gas, which was acting as a marginal price setter in a number of markets in Europe and providing that extra security of supply that can support the grid in periods where renewable stability was not quite there, imbalances were there, that gas question and fossil fuels in general has really come to light because of the concern around whether gas can continue to be provided at the level and at the pace required to meet demand for energy. So I think there's a window of opportunity that's perceived in the market to actually push the energy transition and look at technologies such as battery storage to complement an increasing role played by renewables on the grid.
Thanks, Karim. That's very interesting. So their role is increasingly important the more that renewables come on board, which provides an opportunity. So highlighting your point about playing a role in the energy grid and ensuring the stability of supply, how do you translate that into a model? How does a battery storage transaction actually make money?
Sure. It's important to say that a number of tools have been used in the last 2-3 years to sort of define how batteries have played a role in managing grid instability. One of the most important ones is ancillary services, and this refers to functionalities that allows battery storage essentially to come in and support periods of intermittent supply, short, sharp periods of intermittent supply, where you need a rapid supply of power on a short-term temporary basis. You've also got ancillary services providing capacity to support, again, supply-demand balances on grids. So that you don't expect them to be used in this functionality, but you expect them to provide a sort of a temporary backup in case they are required and they get paid for providing capacity. There's also arbitrage, which is the process of charging the battery when prices, for example, are low, and then releasing power or discharging, as they say, at times when prices are higher, and arbitraging that difference over the course of the day. It doesn't have to be as straightforward as that. It can also be arbitrage around the degree of volatility that you would expect to see within a given day. And that sort of activity is linked to sort of more arbitrage trading activity. And then there is more and more emerging this concept of capacity, firm capacity, so that there would be a fixed payment for an amount of discharging capacity that a battery can have. And that is in the form of, for example, resource adequacy payments in the US. Capacity auctions in the UK and Italy are also providing a kind of a capacity-based payment also. So those are how batteries are making money today. But today, I think it's fair to say that the amount of storage capacity available on grids is still far too small to really manage the very big swings and gaps in supply and demand on grids. So the role of batteries is more sort of backup and when it's needed for short, sharp periods, as opposed to really being able to do grid management on a scale where you can actually smooth the price volatility. So today we're still very early in terms of the amount of battery storage capacity that can really do energy grid management as opposed to power backup.
So on that front, what are we really seeing in terms of the development of this market, in terms of the size of projects that are coming on board? What is the sort of scale that they're looking at in terms of their actual capacity, or in terms of from a project finance perspective, what are the sort of scale in terms of size of funding needed to get these things going? What are we seeing in terms of actual demand to build out that infrastructure?
Yeah, so one useful reference point is the recent capacity auction in the UK, which took place, and where we started to see average grid scale battery project sizes at levels of around 45 megawatts. Now, this compares to 2017 when the average battery project size was 6 megawatts. So they are growing in size. On top of that, you have the majority of sites installed were standalone in the most recent auction as well. So this bodes for a situation where you get larger utility scale size projects in the future. The other thing is the duration has increased. So whereas in the past, the capacity auctions in the UK, you'd see contracts awarded with battery storage systems expecting to have a duration of, let's say, 1 hour. Now you're looking at 2-hour duration. So more flexibility is coming in the market as well. I think the other thing that we are seeing is more and more what they call co-location. So battery storage projects that are being established next to, let's say, solar projects, a solar PV project. And there's a natural complement between the two, obviously, as mentioned earlier, the role of the battery can complement the role of the renewable activity. But what's happening is contractually also, the battery storage is entering into the power purchase agreement, the PPA contract with the solar PV facility, and is being paid a type of availability-based payment over 20 or 30 years, so long as a certain KPI is met that is linked to the sort of the operations of the battery. So we are seeing a use of battery that is evolving with time as the actual assets evolve and become part of larger portfolios, as part of co-location projects, or as the individual asset itself also increases in size.
Okay, now turning to what I think a lot of listeners will be, well, assuming that they're all credit nerds like myself, how is this market being funded at the moment? How are people bringing money to this space and funding it either through the capital markets or on a private basis in order to get these things up and running?
Yeah, I mean, I think we mentioned earlier what batteries are mostly being used for today. They tend to be relatively small in size on a standalone basis. They are mostly engaged in ancillary services. There's a little bit of arbitrage revenue. Obviously, this depends battery storage project by project, but what we're seeing on average is most of their revenues are being generated from ancillary services and to some smaller degree arbitrage. And that's sort of defining the revenue stream for these batteries. And that revenue stream, as you can imagine from these types of activities, because it varies so much. I mean, whatever capacity payment you're going to get on one grid during one day is going to change the next day potentially, and in the next day, and the next week, and the next month. So the revenue streams are typically volatile. They're typically streams that private equity firms or banks that have, or asset management firms that have a specialized, dedicated unit for funding new technologies are able to take that type of risk. It tends to be shorter tenors, 3 years and 5 years is kind of like on the longer range. And it tends to be those types of funders who are funding a lot of the battery transactions because, in our view, the revenue streams are akin to that type of funding. Now, on the other side, we do see those co-location projects, as I mentioned earlier, that are in a different category in our view, because they do benefit from longer term contracts. They are being paid an availability-based payment subject to certain, KPIs, as I mentioned earlier. And those types of deals are candidates for project finance, non-recourse funding, potentially more long-term debt capital from institutional funding providers, infrastructure funds, and the like. But they are still small, few and far between, and mostly in North America. So that's where we see the landscape today.
Are there any lessons to be learned from other technologies and how they've developed in terms of their funding models? I mean, renewables have evolved in terms of the way that they have been funded over time. Are there any lessons that we can put across to the battery technology space?
I think the challenge at the moment is how do you get scale for battery storage so that it can really fulfill its potential? And whilst today we have about 4 to 8 gigawatts of battery storage capacity currently in the market, according to the IEA, this is the International Energy Agency, what we actually need is about 148 gigawatts by 2025 and about 585 gigawatts by 2030. And that's just the amount of storage that we need to complement the degree of wind and solar capacity that's coming online every year. And we are far from that today. So in terms of lessons learned, one of the lessons was that with traditional renewable technologies, to get them really to grow at scale, there had to be a sort of a confluence of driving factors, including regulation, supportive regulation, by the way, in the form of, for example, feed-in tariffs, innovative financing techniques. So, for example, rooftop securitization for solar, which incentivize not just the user of, for example, solar panels through benefits in terms of metering payments, but also the developer themselves that's developing the solar rooftop in terms of investment tax credits and the like. So regulation is important here, was important to kickstart renewables in the early days in the way that it was done. Then you need the funding community to be innovative as well, to support the technology. And at the moment, as I say, most of the funding is coming by way of private equity that's happy with the risk return profile, but we're not getting really much participation from the large infra funds, the large debt capital market funds. And those guys were instrumental to really getting the traditional renewables to develop at scale at the level that was required. And obviously, in the early days, these things are important. Over time, it tends to be that a track record is established in the financing community, and then less support mechanisms are required from government, from regulators and the like. But in the early days, I think one of the lessons that battery storage, if national policymakers wanted to grow to scale and regulators wanted to grow to scale, is to try and provide as much support early on to get to that size, where it can attract a broader pool of funding.
Well, that sort of leads on to my last question. What do you really think needs to happen for these battery storage transactions to fully take off and reach their maximum potential? How do they get to that space and really, can they do so quickly?
Yeah, I mean, I think there isn't one size fits all. I think that's the first thing I'd like to mention. I mean, there has been equity funding provided and corporate funding provided for the batteries that we have at the moment out there. And this is developing a good track record for the technology. It's providing data in terms of, minimum revenues, data in terms of augmentation, degradation, which is all extremely useful. And these deals are getting done and they're being very successful. The question really is around how, as I say, what can be done to get batteries to get to the scale where it attracts a wider pool of funding potentially, and then it, as a technology, more battery storage on the grids, potentially to support the ability to do full grid rebalancing and minimize, the price fluctuation that we're seeing at the moment, the peaks and troughs that we're seeing at the moment, as opposed to being a pure backup source. So I think one of the challenges to get that scale, to allow more storage to actually get funded, and therefore, in return, to allow the storage to achieve its, operability, its maximum use in terms of grid rebalancing. I think the other point that is worth mentioning is there's some positive developments in terms of capacity market auctions, as I mentioned earlier. they are providing up to 15 years of capacity availability-based fixed payments based on capacity, which does actually create the stability and the revenue profile that many of the institutional funders would be looking for. The issue at the moment is that the battery owners themselves are not using the revenue stream from the capacity market auction as their main revenue stream. It's still a very small revenue stream, and much of the revenue volatility still exists and relies on the other activities that these batteries are performing. So there's some positive momentum. Ultimately, a broad confluence of discussion and alignment between all the stakeholders, from the battery owners, the funders, the regulators, national governments, in terms of setting policy, in our view, would help tremendously in getting the alignment and getting the parts to work together so that the technology can achieve its full potential in terms of scale and in terms of funding.
Great. Thank you very much, Karim. So I guess in summary, we need to bring a few people together to the table in order to collaborate and build this technology out such that it can help, especially as we increase renewable demand and build out in the wake of the great energy transition that we are facing at the moment as a result in part helped by the Russia-Ukraine conflict and the rise in energy prices. If you want to read more detail about battery storage technology, we have published a report which can be found on kbra.com. Please go take a look. We have also written about solar and renewables, so please have a look around and dig up some of those reports. Thank you very much for listening. We look forward to bringing you more conversations in European credit soon. So don't forget to subscribe and like our podcast, as well as checking out kbra.com for our latest research and ratings. And we wish you all a prosperous remainder of 2022. And I look forward to speaking to you again soon. Thank you very much.